Inflation is rising in Saudi Arabia as King Abdullah's spending plan aims to diversify the economy and avoid further political unrest, as observed during Arab Springs, which witnessed the overthrow of 4 leaders. In the first quarter of 2011, he pledged to spend 130 billion on additional subsidies for housing and benefit. Saudi Arabia posted an inflation rate of 3.9% in January, a rise from 3% in September. Inflation in the United Arab Emirates was only 0.4% in comparison. Emin Mustaq, a London-based strategist at Noah Capital Markets, said inflation is rising because loan growth is finally rising, led by the consumer. The 3-month Saudi interbank offered rate is the only comparable rate to surge in the 6-nation GCC since September. Today it was unchanged at 0.98%. Mustaq also believes government spending is also increasing demand for Saudi's rials and local assets. This has an inflationary impact. This year, the king increased spending to 219 billion for infrastructural projects, including the construction of schools, roads and rail lines across desert country. This is part of a larger plan valued at over 500 billion. In 2012, Saudi Arabia's economy grew 6.8%. The IMF expects to see Saudi Arabia to expand 4.2%, which actually contradicts Saudi's finance minister's projection, which sees the economy surpassing the 6.6 figure in 2013 and continuing to expand every year until 2017. Abdul Wahid Al-Matar, head of trading at Saudi Hollandi Bank, said credit growth was directed mainly to projects and believes it might contribute to inflation, but the biggest chunk of inflation is for rent and food supplies. Food prices in Saudi Arabia were provoked by disruption to supply chains caused by Arab Springs, which saw the destruction of Syria's agricultural sector. Many believe food and rental prices may stabilize, calming consumer price increases. Saudi's central bank governor is not concerned about the inflation rate, stating, "Current inflation is tolerable, and if you compare to other emerging markets, we are well below." However, according to the IMF this year, consumer prices will average 4.6%, which is the fastest in the 6-member GCC. Well, we have come to the end of today's press review. Enjoy your evening.